Gold prices continue to push higher and may see a breakout of the short range we've seen over the last several weeks. We've seen a nice sustained trade between 1225, 1230. We've seen a hold there for a considerable time. Now we're starting to see a push higher after what looked like was going to be a head fake lower. So I think right now we're kind of seeing that sustained trade, and poof, we're now seeing a high move up into the high 1230s. Next stop could be 1250. You're going to get a lot of resistance there unless we see some kind of event or some kind of dollar event that pushes the market higher. But gold right now finding favor. You got to go way back to August. We printed that year-to-date low, and then we've just been slowly trickling, and it took an early October move to really change things up, and we haven't been below 1200 since. And that's been really the key here, is that 1200 level. We haven't pushed back through it, which would have caused, I think, a lot of these shorts that covered to get back in, or the longs that have got back in and have held on. So right now we're seeing the market start to shift maybe a little higher. Maybe risks are rising as we get to year end. Don't forget, we've got Brexit right around the corner at March 29th. We've got obvious trade tensions continuing, despite the fact that the G20 says all is well. Nothing has been set in stone yet. And so there are a lot of key concerns in gold, which has not found favor in any of those risks that we've seen pretty much all year, is now starting to turn the corner. So holding north of 1200 for quite some time, and now pushing north towards 1240. I think 1250 again will be a key resistance level. And if you look at the dollar, yes, the dollar's had very volatile trading sessions here, even if you go back prior to the G20. But today was not one of those days. We saw a very sustained sideways trade. So the bid we saw in gold today, not necessarily dollar related. As we've seen the dollar bid throughout this year, yes, it has been one of the reasons why gold has come off so quickly. Not only that, but you look at interest rates going higher and yields going higher, that is also taking some of the attraction away from gold. But I think ultimately right now we're seeing the dollar trade sideways and gold bid means that there's a little bit of separation there. It's not all about the dollar. There are some extenuating concerns that I just mentioned, and that will also continue to keep gold bid. And lastly, let's look at the positioning. Earlier this year we saw gold speculators net short, then they got back to flat, and then they went short again, and then they got a little bit long, and then they got a little bit more long, but they've seemed to have pulled out of that. And as of last week, we see them pretty well flat. They're a little bit long, speculators are, and they're going to be in control here. Because as the market goes higher, those new longs are going to be what drives the market higher. And if the market goes lower, it's going to be new shorts that drive it lower. So right now, we are still seeing speculators holding a small long position. However, any big move in the market that gets exaggerated via the speculators is going to be either new longs or new shorts. So right now, they are holding the keys to the car that will drive gold prices, at least over the short term, probably into year end.